Hello, so in today's lesson I'm going to teach you how to use QM, or in other name is Quasimodo pattern. So here is the first step. This is for selling example, which is first you need to identify the high like this, form a high, and then form a high, which is the swing point. It's much more higher than the previous high, and it break the neckline from the previous higher high. This is the neckline, so it break. You need to do the breakout for valid the zone, confirmation, and you can sell at this zone. The price, wait for the price for the tap, and when the price tapping on here, you can wait for the second Quasimodo or QM pattern in here on the lower time frame, or it can be the same time frame, depends on your trading style. Okay, so it form a high in here, it form a higher high, break, tap the entry zone, and voila, this is what I call double QM pattern, where this is the direction. Okay, this the main is the direction, the main QM is as a direction, and the second QM is for entry point. So you can take a profit. For the take profit, you can take it here, take profit 1, and here will be 1, and the lowest one will be take profit level 2. So this is TP level 1, and this probably will be TP take profit level 2. Right, it's so simple. For buy, you can flip it, you can mirror it, just flip this pattern downwards. I will see, and you will have an idea how to using this as a buy signal. So yeah, this is very simple but powerful setup. Alright, so in this video we will use Euro AUD for the study, for the example, how to use the double QM on the chart, how to use the Quasimodo on the chart, double Quasimodo. It's very powerful, it's very unique, and you will never find it if you don't have a high level of patience. So this is how I'm going to share with you guys, like how to do and how to use it. It's very powerful, but you need to have a lot of patience because it's quite rare, but it is powerful. It is. And also I will share with you based on the hindsight, but I think on the part 2 of this video I will make maybe on the live market. Maybe I just do the live streaming to share with you how I'm going to apply this method on the real time, so it will be much more efficient, and yeah, you guys can learn it and be much more clear with this pattern. If we just share it based on the hindsight, it's quite confused sometimes. It can be confused if we don't have a lot of data or examples. So yeah, let's try it out. So here, as we can see on 4 hours Euro US, 4 hours Euro AUD, Euro AUC, we have what? We have low here. See, we have a low here. It's a low. Let's mark it. It's a low. Right. It's a low, right? You guys can see with your bare eyes. Right, then it formed a high. It's hindsight, guys, but yeah, still we need to make a messy mapping on this hindsight chart for the education purpose, for the backtest purpose, for you to understand and training your eyes to see this kind of thing, this kind of naked chart. You need to train your eyes muscle to be able to use to see this kind of thing. So it will be much more easier when you be on the live market. So yeah, you will be much more easy on the live market if you train it very well. If you put and a lot of hours on it, it will be much more powerful for you. So you need to be work hard, put your times on this, and don't give up. That's the most important thing. Don't give up, and just stick on one thing, on the process making. So here is the zone. So we can see here is the zone. So low, okay, and then it form a lower low on here, lower low, and it breaks the previous high. You can see it very clear. And the lake, I call it lake because of the movement is very significant, and it's to the breakout. So the lake from the previous low is very very high. We change the color for you guys. I worry if it will make us confused if we use the same color. So yeah, see, the lead is very very long. I think around 300 pips, and it formed a 146 pip, equivalent with 1440 point total of breakout. So yeah, it's oversupply. So it need to find the equilibrium on the market. So it will need to clear the supply by finding the demand. So yeah, this is the QM level. You need to mark it at the previous low, on the previous low, right? So call this as QM. This is the traditional QM pattern, but in the modern time we call it TRT, trap retail trader. Why trap? Because this low, as we saw before, we will consider this as a support, but it breaks, and we consider this support to become resistant, but it break and fail and hit all of the retail stop loss, including us. If you use the traditional support and resistance, or resistance become support, or support become resistance, we will hit multiple of stop loss. So this is the reason why I call it STRT, trap retail trader. Yeah, it sounds very logic instead of Quasimodo pattern. In term of function, yeah, and in term of it much more easier when I put the name. I mean, like, related or similar with the function. That's why I call this pattern as TRT. So this is the TRT zone. So how can we make an entry and exit at here? This green trend line level. How can we make an entry after the breakout? This is the breakout. 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 This is the breakout. So how can we make an entry? So of course we need to wait for the price to retrace and tap in on this TRT zone. So if we going to drill down on the lower time frame, which is H1, or you can go just jump onto M30, you will see another TRT pattern, another QM pattern that form inside the zone, where I call it double TRT or double QM. It depends on what you guys want to call it, or which one is much more easier to call or to remember. See, it form another TRT. Need to just zoom out it, and you will see the TRT pattern. See, we have the low like always. We have the low. Draw object as the background first. We have the low, we have the high, we have the lower low, and we have the breakout. The breakout, the high high. For this pattern, we just focus on the wick instead of body. We just focus on the wick as a breakout or as a the structure or whatsoever. Just focus on the wick. For the TRT pattern, I remind you, just focus on the wick. Right. So we mark this low as a zone, TRT zone. Okay. So where is the breakout? Breakout. Okay, that's the breakout, the week. We saw the breakout already. We marked the breakout level as a red color, trend line red color. Okay, so we have a high like always, and then we have a low before the high, and then we have the low, and it going up from a lead, break the what? The previous high, the previous week, the previous height of the week from a higher high. And we can make an entry point here. Here, we can make an entry point here. Entry. See? Double TRT. Instead of you guys need to put an stop loss here, the benefit is when you use the single time frame TRT, you will need to put a stop loss at here, which is it will cost you around 90 pips. 90 pips. 90 pip. Cost. But if you wait for the double confirmation of TRT, it will just cost you amazing half of the price, which is 40 pips. You already save 40 pips range for double TRT confirmation. This CN confirmation. Whatever. So this will cost you only 40 pips. Okay, so instead of you put your SL here, it will be only here, and the TP will be here. This is TP1, 1:1. This is TP2, around 1:5. But if you don't like, you know, it still does not satisfy you. You don't satisfy with the ratio or the stop loss whatsoever. You want to reduce your risk or you reduce your cost, just open the lower time frame and find the continuous TRT. You know, you have already the double confirmation, so you can make it much more, you know, in artistic way, right? So let's see what we have here. We have nothing around here. What about here? We have, what is this? See, any TRT pattern? So like here, but it doesn't take our entry point, so it's okay. See, we have this as the RT, high, a low, high, and higher high, is lower low. So we need to entry it at here by the price, tap the stop loss, and we continue at here. We have what? We have high, breakout, we have low, high, low, low, and breakout, entry here. Entry. So the stop loss will be around here. The safest 30 pips. I think it's still same around 1:5. But if you wait for the, I don't know, for the lower time frame, you need to be, I think we cannot check it on the M1 because the lack of the data, but it's okay. But what I can assure you, this is one of the safest way how to use the RT pattern on your daily basis trading journey. So yeah, you need to do a lot of homework, back test it on the hindsight first, and try forward test it on the demo account, and you will see the progress, the TRT, the power of TRT. See, we have TRT here, we have low, high, lower low, higher high, sideways, but it hit the stop. It hit the stop, but it's okay. At the same time, you sell here. We have high, we have low, higher high, and it don't take our entry. And finally, it take. You put your SL above here. For the SL tips, don't put it too close with the zone, with the higher high zone. Give some space for your position to breathing. So just don't put it here, just give some space. I don't know, maybe half of it, half of this box. You just time, you just plus it. Like let's say if you entry at here, let's say we have 9 pips, so add 4 pips from outside of this box. 4 to 5 or just times 2 can be it. So this is your stop loss level. So yeah, just you need to be creative. Okay. So you sell, you have a buy at the same time, and your buy hit the stop loss but still running because you yeah, or already take profit, but it's okay. It's okay. You just need to look at on the lower time frame for the confirmation. I see TRT here. Can you see it? Here. Change the color. High, low, high, high. Yeah, here. Tap entry. Boom. Smooth operation, baby. Alright. This is this is what we call TRT pattern. So this is it. So I think enough for this part 1 video. So thank you for watching, and anything you can comment it, any question you can comment on it, and I will answer all of the comments and maybe make another video for your question. So yeah, bye.